Hey traders, John Howell here. I've been looking at gold today, doing a bit of analysis on the markets, and I'm noticing something that's really interesting that's happening with the moving averages, or the moving average, and what's happening with gold. So I also want to quickly share with you today. Let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so what I want to share with you just quickly is just one simple technique that I use. Whenever I'm looking at the markets and trading the markets, I'm always looking at different things that I can use to tell me when it's, well, obviously when it's a good time to buy, a good time to sell. Now, obviously I use a strategy for that. And by the way, guys, right now in this current environment, do not be trying to gamble, guess. I don't care what you think, what you hope. No one knows exactly what's going to happen, definitely. So then just make sure that you're keeping your risk management under control, have stop losses in place. Don't be ego trading, especially right now. Right now is not the time to be ego trading, because the overall stock market could roll over, or we could be getting ready for a big move up. We just don't know yet, right? It's in that indecision mode right now. So there's a quick little update across the actual market itself. And as always, guys, when in doubt of a trade, just get out of the trade. So I've just been doing some analysis on gold here recently, and one thing I noticed is that you see this blue line on the chart. This is actually my 52 moving average. So we're looking at a day chart right now. So this is a 52-day moving average. And one thing you notice about the 52-day moving average is that whenever we start to get too far away, again, it's not exact science, right? It's not like, oh well, once it gets $444 away in 26 cents, that's going to be the top, right? It's not exact science, but we can see that whenever we start to get too far away from the moving average, even up here, too far away, even through here, right? We've got too far away. What tends to happen? We tend to get a what? We tend to get a pullback towards the moving average. So this is what I like to use, these areas up here. Again, we don't know exactly where it's going to be. This area here, this area here, and this area here. We can see even this area through here. We can see that when it gets too far away from the moving average, now that's getting to the oversold level. And what tends to happen with that is that we tend to get a bit of a pullback towards the moving averages. And with that, that's obviously what actually happens there, right? So we get a pullback towards the moving averages, and then the market resets. So what we're looking at right now with gold is, look how far we are away from gold right now. We're getting towards that. Now, it doesn't mean we can't keep going up, but we are getting to the extremes of the oversold level right now with gold. On a short-term level basis. If you've been watching my videos for the last week or so, I've been saying this, but you can see here that we're getting too far away, and there's a big probability that is actually buying it right now. It's a really on a short-term level basis anyway. Investing, different story. But right now we're getting too far away from the moving average, and so this is what you can actually use this with your own trading, right? And I like to use this with my own trading. I always like to wait for pullbacks. So if I'm trading in an upward trend, right, or if I'm trading with a trend, I always like to get in on trades that pull back to the moving average and then go again, right? Pull back towards the moving average and then go again. Makes sense? So that's where with my strategy, I'm always looking at those sort of things. So make sure you can actually add this to your strategy. I promise you, if you add this to your arsenal of trading techniques with that you're using for your trading, I promise you that it will start to explode your overall success rate in the markets. And once again, if we get too far away from the moving average, it's like elastic band and we pull back. But once we start to get around the moving average, you can see how around the moving average is pretty what we call neutral. Too far below is oversold, and too far above is overbought.